Thank you for joining us for 3Bs on the Law podcast, hosted by Trisha Barita, Camille Canali, and Susan Dawson. Disclaimer, this podcast is for entertainment and informational purposes only, not meant to provide legal advice, and does not create an attorney-client relationship. Also remember, laws change or they differ by jurisdiction, so this is not a substitute for seeking legal counsel in your jurisdiction on the current law applicable to you.
Hello, everyone. Welcome back to 3Bs on the Law. We are continuing our business startup series with a special guest today, Bob Tighe. He is a CPA that I personally do a lot of work with and enjoy a great working relationship with his firm, Tighe Crescent Orr. Bob, why don't you tell us a little bit about your firm?
Sure, absolutely. So our firm is a little over 50 people. I'm the managing partner of the firm, and we have offices in Chicago, Elgin, and St. Charles, Illinois. We specialize in many different things, but I would say, from a size client, from startup client all the way up to clients that are as big as $150 million in gross receipts. We deal with international clients as well as multi-state clients. We deal with also QuickBooks Pro advising and smaller stuff too. So we really run the gamut on things that our firm is involved with. But we one of the things that I personally am involved with a lot is structuring and trying to help people identify the best entity or the best tax structure on a regular basis. And so something I really enjoy doing.
Well, and that's why you're here, because we're here to talk about LLC versus corporations, right? There's a number of entities when you're starting up a new business, but generally we focus on two: corporations and limited liability companies. And as we said in our last podcast, where we're talking about the legal issues related to that, you got to bring in the accountant. It's part of the team. You can't, the lawyers can't make the call in isolation. There's accounting issues as well to talk about. So what are some of the considerations that you go through with new clients when they come to you and they say, hey, I'm starting a business and I don't know if I want to be an LLC or a corporation?
I think the first question, that I usually ask is just how much revenue do you think you're going to earn in the first year? I think revenue is such a big part of the equation about what you select from an entity selection, because a lot of it has to do with self-employment tax. Some of it has to do with whether or not you should get into the LLC so you can still file on your personal tax return rather than on a corporate tax return to try to save accounting fees and so on the front end. So I think the revenue dictates most of the entity's choice on the front end. Some of it, though, is also how many employees are you going to have? Are you going to be in a rental type entity or rental property, rental type environment, or are you going to be in an operating company? So there's a lot of considerations depending on what specifically you're doing. I think another big, consideration is self-employment tax and trying to understand how that's going to play out. And the third, and probably another major consideration is retirement funding. I think we really care a lot about retirement funding, and you have a lot more choice per se of what you can do from a retirement standpoint in an S corporation rather than being in a sole proprietorship or in a partnership sometimes. And so it really depends on what your goals are.
What are some of the top misconceptions startups have about how taxes work with their new business?
Yeah, I think there's quite a few misconceptions, I would say. I think that one is I think that a lot of people think it's something that you can do on TurboTax, and I think that's a really usually a bad idea. A lot of people who have done that do come in eventually and realize that it's inappropriate for a long period of time. and we end up fixing a lot of things. And usually, especially when you're getting a K-1 form from a business, or if you're starting a business yourself. I think a lot of people miss deductions. I think a misconception is that they know all the deductions they're going to get, and they don't really think through all the deductions they really can get. And I think there's a lot more deductions available, especially your first year, that you're just not going to think about unless you go to see an accountant, or CPA related to that. Some other misconceptions are that you have to pay tax on all of your income, or you have to essentially pay salary or pay self-employment tax on all of your income if you're in a service business, or if you're in any type of business. A lot of people think that they have to always pay self-employment or take a W-2 that equals the total amount of income or net income even that they receive, and that's just not true. And so, we often have to talk a lot about self-employment tax and salaries and return on investment type equations.
Do you also, I'm going to ask kind of a follow-up question to that in terms of that planning. Do you also kind of help your new clients, especially with what receipts they should be keeping and how they should be organizing it for their taxes? Because I think that's something that a lot of people who have never run a business before don't quite understand initially.
Wait, are you bringing up documenting, Camille?
I am. I have to work it into every podcast. You should know this by now.
I think it's a great thing.
Camille's favorite subject.
It's really important, and I think it's it's in almost every first conversation that I ever have. And it's not just the documentation side of it. I think the documentation is a huge thing. Some of it is, are you going to be in an accounting program? Are you going to track it via Excel? Are you just going to wait until the end of the year and try to download everything into an Excel and pivot table it? There's lots of things that you can do to track your expenses, but at some level, you're going to have to give your expenses to your accountant at the end of the year. And most of the people I've talked to very much dislike going through all their credit card receipts and all their bank statements, especially if they commingle funds, to try to get to the end of the year and try to figure out what they have from an income and expenses perspective. And so what I would say often is if you're going to have a business, you should have a separate credit card, right? And that business's name, or at least in your name, that is meant for the business specifically, so you can allocate all your business expenses to that credit card, and try to get the most reward points you can, right? I mean, lots of business owners are having to spend lots of money in different ways, and so if you can use your credit card to do so, it's great. But I think if you have that separate credit card, it really helps that everything is business on that, and it's segregated. Checking account, I would say the same thing. Even if it's a sole proprietorship, you should have a separate bank account. It just makes it easy. And at the end of the year, again, you're going to have to try to figure out what your income and expenses are. And if everything in your accounts, the payment methods that you use are business items, it's going to be very easy for you to get your tax return done, and it's going to be a lot less of a headache. And frankly, the way that credit cards download at this point, if you don't deal with Excel a lot, your accountant does, right? And so they're going to be able to take a downloaded credit card classified transaction list and really help you classify that quickly, and turn it into a pivot table so you can really just have totals from an expense standpoint, and it's going to be really easy to get your tax return done from that perspective.
Those are all good points, Bob. I think we all kind of chuckled when you made a mention that people go use the TurboTax and then eventually you fix it. We're lawyers. We don't know anything about people doing that kind of stuff with us, right?
Never.
Sure.
So TurboTax is the accountant is what LegalZoom is to lawyers. Is that what you're saying?
Let's watch it, Susan. Don't get us on trouble naming people and getting things. I'm kidding. Yeah. We know a little bit about that, fixing things and after, but let's face it, right? People that want to get into business, they're creative, they're entrepreneurs, they're excited about whatever this idea is. I know, when me and Susan started our businesses, we were pumped. I'm on my second law firm now. I have to tell you, when I started my first law firm, I think it was like 7 or 8 years ago, and don't scold me on this now, Bob. I thought, like many entrepreneurs thought, I can do it all. I'm going to do the bookkeeping, and I'm going to figure this whole thing out. So I kind of want to talk a little bit about that, because you're talking about the deductions and all this other stuff, but if they screw up the bookkeeping from the beginning, you're screwed, right? When you get to see what the heck they did with all the records and the evidence, keeping everything separate. So I was ambitious. I think it lasted 3 months. It was a total fail. It took like every QB class, QuickBooks, and tried to delve into all this stuff. I did realize that there are more qualified individuals to do that than myself, and people that actually enjoy bookkeeping. And so obviously I decided to, farm that out and get a bookkeeper and get a CPA, which I think is all vital to starting a business. But what are your thoughts on bookkeeping? What do you like to see when someone starts a business?
Well, it's a great question, and I think at the end of the day, we really try to, at least from an accounting firm perspective, we try to offer a phased approach, right? Some people don't want to have anything to do with it, and if you don't, there's a bookkeeper or an accountant that's willing to do your services, and you're going to pay it probably a little bit more to do it that way, but you can definitely do that. Second is you can do a partial scenario where they're involved some, so they're checking what you're doing on a monthly or quarterly basis, but you're really entering a lot of the stuff and they're giving you feedback. That's a great way to learn, over a period of time. And I think you're also getting, checked on your bank reconciliation. They're also going through reports, with you on a monthly or quarterly basis, so you understand what they're looking at. What does my expense look like from period to period? Am I spending too much in a certain area? Could I be doing something in a better way? And the last approach is really getting either you trying it yourself or getting training on the front end 100%, where they're just going through the books with you. And I think all of those approaches are good. It really depends on what you want to do. I would say, though, the closer you are to your accounting when you're starting a new business, the more you understand about the expenses that are going out of your business. And so we find that the people who are usually most successful in having the most net income or profit, going forward, are people who are getting trained, or really trying to understand their financials a little bit more on the front end, because they really can see early on, hey, maybe I am spending too much, or maybe I don't have to spend in that area. And I think they're also getting feedback from somebody that has experience with thousands of startups. I mean, we've done so many startups along the way. I can give you a lot of, success stories, but I can give you a lot of failure stories too, and what they did wrong, and why you should do something in a different way. And I think those things are other people's experience. That's what professionals are for. They have so much experience dealing with and seeing different examples of these scenarios, that they're going to be able to give you a lot of good advice about things that you could do in a better way. And I think if you're listening to your professionals, I think you're going to be a lot better off long term. You're going to be a lot more profitable. You're going to be it's going to be a lot less fees, because frankly, if you don't do it the correct way on the front end, it's a lot of fees to undo what you've done, right? And I think that you're way better off being on the front end of that.
I think that's interesting, especially on the different pieces of that, certainly, and we're not going to get too into what Susan would call the nitty gritty of it all, but the when you put that first money in, because you made that comment earlier, you said, when they come to you, you're like, how much money do you expect to, and how many people say, I expect to make $1 million this year? Or do people say, I expect to be in the negative? I want to break even. When you're looking at all that, and some people start businesses while they have another income. And can you talk a little bit about pass through and the decision of the entities, and how all that comes into your mind when you're hearing these answers, $1 million or whatever?
Yeah, I mean, someone came and said that they're going to make $1 million. It depends on if they're going to be a real estate entity or an operating entity. If they're going to be a real estate entity and they're going to make $1 million, I'd like to see which one is going to do that, because usually they wouldn't do that. Most entities that have property in them, just they're break even type entities, because or they're tax neutral entities, essentially, because you get a lot of depreciation and so on, and so it'd have to be an operating business. And I don't know, many operating businesses can go from 0 to $1 million in 1 year, not even probably 5 years. So sometimes it's about setting expectations and really trying to understand, what's realistic. And I think part of our job as professionals is to modify expectations and to understand why you really think that that's there. And so looking at assumptions. But I think in general, we can talk a little bit about a choice of entity, which is there's the LLC and there's the S corporation. There's a sole proprietorship too. And in this scenario, we should probably talk about it briefly because I think it matters. But I think if you organize in your state or organize in general or incorporate in general in the country, somewhere in the country, you are going to be either a C corporation or an S corporation. You don't have any other choices as a C corporation or an S corporation. If you are an LLC, then you have the choice of being 4 different entities. You can be a single member LLC, which is disregarded for federal purposes, which means you're filing on your individual tax return. You can be a partnership. You could be an S corporation, and you can be a C corporation. It's all a choice. So from an overall perspective, we love when people are LLCs because it gives us a lot of flexibility. And frankly, most people who come in they don't need to be from a tax perspective an entity or file a corporate return the first year because they're usually going to have losses, right? Most entities have losses the first year, and if you don't, then great, you did a great job, and you should be happy about it. But if you don't, we can always make late election on an LLC and turn you into an S corporation if you're an operating entity, and we can correct the situation through tax planning as long as we do that before the end of the year. So I think from that perspective, I think that LLC is usually one of the better entity selection, just because we have a lot of flexibility. And when you talk about the different entity selections, why we choose an S corporation most of the time from an operating perspective is really we think that you're able to do a lot better retirement planning through an S corporation, and we think that there's a lot. So self-employment tax or Social Security and Medicare tax, you can limit Social Security and Medicare tax in an S corporation, which really makes that entity favorable, right? And so I'm going to talk about that for a couple seconds because I think it's an important point in the overall taxation of entities. If you're an operating entity and you're a sole proprietorship or you're an LLC, you're really required to pay Social Security and Medicare tax. Up to the limit. For Social Security, it's $137,700 this year, and you have to pay Medicare all the way up until your income stops, right? So forever. In an S corporation, you're getting paid a reasonable salary, and so maybe you earn $100,000, but a reasonable salary might be $60,000 in your situation. And there's a lot of factors in that, and I think you really have to talk to an accountant to understand what those factors are and how to do that. But you can have a disparity between your total net income of $100,000 and your salary of $60,000, and by doing that, you save self-employment tax on $40,000. Saving self-employment tax on $40,000 would save you $6,000 in total tax. Right. So if you were a S corporation in that situation, and the reasonable salary was $60,000, you're saving $6,000. That's a huge answer difference. Not only that, but you could still, as long as you choose the right retirement accounts and how you want it, you can still max out your deferrals in 401ks and still get a profit sharing contribution if you're a sole owner, type of entity. So there's a lot of really cool things that can be done in those entities. But again, if you were an LLC, you can still be an S corporation, and you could still, on the front side of it, when you first start your business, you could still not have to file a corporate return and have to pay the additional fees that come along with corporate return filing, and 941s and all the payroll tax returns that come with that too, because there's a lot of administrative work that comes with those type of entities, and so a lot of times it is really nice to have that choice, and so often we see that LLC is probably one of the better recommendations.
Awesome. Thanks, Bob. That is a ton of great information. And I want to talk to you more later about the whole retirement planning aspect, because I don't usually talk to clients about, not that I go into accounting aspects, but I try to give them some highlights before I send them over to the accountant. But yeah, that's terrific. So what we like to do when we wrap up our show is have our guests participate in a fun game called the 3Bs Showdown. We started it in our first season of the podcast, and it's carried on into the second season.
It's never ending.
No one's won yet.
The never-ending showdown.
So how this works is I'm going to give you a question, a scenario, and I will read off 3 answers. You don't know whose answer it belongs to who, and you pick one of them. Even if all 3 of them, you're kind of like, I don't really like any of those. Pick the one that makes the most sense. Okay? All right, here we go. So it's appropriate for right now because some people like Camille and LA are in lockdown. And though Illinois, we're doing, knock on wood, we're doing okay right now. But as some states are going more towards locking down during the pandemic, our question is, during the pandemic, when you are in lockdown, meaning, you're stuck in your house, what is your favorite activity? And your options are binge watching Netflix, board games, or listening to podcasts and audiobooks.
Board game.
That's what you got. That's what we get. I win. We get a dance. All you
I
get
never win when it's Susan's guest, so this is super special for me, Bob.
I actually thought you were going to say Netflix because we had a great conversation today about The Mandalorian. But
Netflix is
Netflix, but it's TV.
Netflix is kind of high up there, but I think, during the pandemic, I think, especially for us, I mean, all of us work a ton of hours and so we find ourselves a lot more at home. And one of the things I try to, take away from it was just trying to spend a lot of family time. And I think, sometimes when I get caught up in a TV program, I'm focused, right? And just I can only do one thing at one time, right? And I think with the board games, you get really to spend some time with the kids and my wife. And I think just a really awesome opportunity to slow down a little bit. And I think it's been cool.
Is that what's your favorite board game, Bob?
I actually we play Clue a lot. We play something called Santorini a lot. We play Monopoly some. We play a lot of card type games, but Skyjo or Uno. Skyjo is really cool. It takes a little longer to play, but it's pretty cool. It's just its own game, but it's a pretty cool game.
How about Catan? Do you play Catan?
I do not.
Oh, I love Catan. Check that one out.
Check it out.
I don't even know what that is.
Your girls aren't ready for it.
Oh, okay. We're on Hungry Hippos, Susan. It's very serious over here.
Right. Well, awesome. Well, Bob, we've really enjoyed having you. I always enjoy getting to see you. And during the pandemic, I don't get to see you like I used to, but I'm glad that I got to introduce you to not only Camille and Trisha, but to all of our listeners. So thanks again, Bob, for joining us today, and see you all or listen to you all next time. You'll listen to us next time on 3Bs on the Law.
Thanks so much.
Thank you for joining us on today's podcast of 3Bs on the Law. Don't forget to like and subscribe to our podcast. We also welcome any comments. If you'd like to get in touch with us or suggest a future topic, you can email us at 3THREEBsonthelaw@gmail.com. And because we're lawyers, we need to remind you that this podcast is not meant to provide you with legal advice and does not create an attorney-client relationship. Thank you again for joining us, and have a great day.